Yeah, we are live now.
Okay. Good afternoon, guys. So now let's start the next session for the day. We have Pratekk Agarwal, a speaker, to speak on digital lending post-budget roadmap. Pratik has been the ex-CBO of BharatPe, and now he's a consultant. So Pratik would give us few lines, few views on pointers such as the digital lending models, the concern in India, how many digital lending genuine apps exist, how what are the regulatory concerns, consumer protection, and what does the budget 2021 have in store. So Pratik, you can take ahead from here.
Thanks, Anya. Thanks so much. Great to be on this platform. I think we have over 100 participants, right? And this is a great place to be. So, yeah, Sanya, I think when I look at digital lending, I think when we go back, let's take some time out of going for post budget, right? I think let's understand what is it where we are right now, right? Let's understand the current state and forces impacting digital lending, right? So we all know that we are about 130 crores plus population. We have about, out of 130 crores, just about 35 crores of people have just one loan in a lifetime which they have taken, and that makes it less than 25% penetration, right? So
Mhm.
just imagine digital lending of this 35 crore people would be how much, right? Just about 20-25%, right? And majority of Indian lending, more than 90%, is done still in the traditional way by banks, NBFCs, leading banks and NBFCs, right? And to just shoot some numbers, it is about, NBFC market share is less than 15% of the GDP, right? The unbanked population is about 356 million only. Mutual fund penetration is less than 10%, right?
Right.
Wealth management is less than 6%. Insurance is about 4% less than, right? So, which so much of under penetration, I think I look at it as an opportunity in India. Right, and which are the forces which typically are driving the change now, right? So if you see that everything is underpopulated, if you even stack it up, you have like 4 to 5 tiers, and every 5 to 7 years, this one tier of the bottommost is actually learning, and per capita income, the knowledge levels, the understanding levels, and they're going to the next level, and that's how the market is opening up. And this is just the right time where, if you see, the forces are typically three forces which are there, which is expansion of digital footprint, right? You see credit cards which have just started now, right, penetrating through the second tier. You have debit cards which are penetrating. UPI QR code has really taken, like, numbers, right? You have wallets. So these are all the enablers which are going to actually be the framework or the baseline for the next digital lending change which is going to happen, right? If you see consumer trends, right, consumer trends are changing. Now consumers are looking at, they're more informed. They know what the KYC is. They know what the bureau is. They know if they do not pay up, what happens, right? They want to use their limits for lifestyle expenses, right? If you see buy now pay later, or a credit line products, these are more in the ecosystem, right? There are multiple VCs investing in companies who are coming up with these credit line. So what I'm trying to say is that we had a past, we have a current, and I think this is just the cusp of the next big multi bagger, probably, in next 5 to 7 years, right? And if you see the regulatory governance, regulator is also being very open now, right? You never saw 5 years back that you were actually seeing something like a fintech on an RBI website, right? I mean, that was on the Twitter. So you have so many things where the regulator is working with the industry experts to creating something new. So I think the digital enablers, the consumer trends, the regulator, and all these three things are basically the forces which are going to impact the digital lending, right? If you also see the collaboration between regulator and the BFSI community and fintechs is all time high right now. Correct. You
Right.
have, which started with Aadhaar, which started with other things, right? And now you have AA coming up. So you have so many things which are enabling that. More and more transactions are moving digital. You have increase in mobile phone penetration, smartphones, if you read the latest thing of Jan numbers, you have 2.3 billion transactions worth 4.2 trillion, right, in Jan only. So these kind of numbers give a very positive vibes that yes, this is the right approach. Right, India, we got to also understand that what is the kind of percentage of people who understand digital, who understand smartphones, who understand whether this is a right product or a right thing or no, right? And hence every decision has a very high impact on the kind of population, right? So you will see the regulator also will be always looking at something which is mass, something which is understandable, something which is which people cannot be conned easily with, right? um, so digital lending in India, if you see, this is going to be the next growth phase, right? And it's not so easy also to enter and to create such a kind of thing. If you see, China was the same 20 years back, and we are typically on the similar track where uh, you know uh, uh, you have the greatest of the highest of FDI coming in, right? And if classically I use this thing, where I say that in the fintech ecosystem, in the digital ecosystem, hook can be anything, right? Hook or the layer. You can be selling food on Zomato. You can be selling Bharat Bill Pay service like a utility bill. You can have a payment of credit card. You can buy groceries from big basket of the worlds, and you can use any of the form factors, which is debit card, wallet, UPI, anything. But end of the day, the money is going to be made only in lending, right? India में आपको सब कुछ फ्री में मिलता है, right? Literally, right? You have a zero free MDR. You have free credits for 5 paisa or 1 paisa. You have everything free, right? But when you take a loan, right, you don't say free mein de do loan, right?
True,
Loan is
true.
where you would typically say is can you give me a better interest rate, right?
Correct.
So if you see that way, it's right. India, um, uh, you know the lending business is going to thrive in next 7 to 10 years, right? And trends are changing. The long term engagement of 10 years home loan, or a 3-year business loan or personal loans have been cut short, right? Why do you think? Examples like payday loans, right? Examples like rental cars, examples like rental homes. All of these things are coming where you want a shorter tenor. You don't mind paying something extra, but you do not want a commitment. So I think these trends actually are boosting the digital lending, right? And how many there was a question which you posted, right? How many digital lending apps exist? So now let's move to
Genuine,
a couple
genuine
of
digital
questions.
lending apps.
Yeah. So let's move to the questions now, right? So how many digital lending apps? I think last I heard was about 1,000 digital lending apps, right? With all the possible combinations of fast, paisa, dukan, everything, right? Get quick loan, anything and everything. So almost 1,000 apps were there, which I think Google and recent crackdown in Hyderabad helped kind of erase more than 900 apps, right? And currently you have just about 40-50 apps is what I know of, right? So these apps, why did they come up, right? In fact, there is an article today in the Morning Context, right, which actually highlighted one of the companies which made a 9,000 crore book in just 12 months, right? With a revenue shooting up to 1,300 crores, with 5 offices and 4,000 people, right? And these were Chinese funded companies, and the money has moved from India to somewhere else. So my point is that whom are you catering to, what are you offering, and eventually how is it regulated? Right. So these are some of the concerns I think in the digital lending which we need to solve for, because I've heard people paying even 1% per day to these payday loan companies. So I think the regulator is moving in right direction. There is a decent sense of understanding now in the ecosystem that you can't really charge obnoxious rates. You have to follow a right process, especially in the regulated entities, right? And hence you would see the regulator coming very harsh on more of the Chinese apps or people who are not following the right, who are not on the right side of the regulator. Right. So I think it's good that all these apps have been pulled down, right? And I mean, just imagine you're taking a 5,000 rupee loan, uh, and imagine the kind of guy who's taking a 5,000 rupee loan and he ends up paying probably around 10,000 rupees in less than 2 months or 3 months time. So what is the kind of rate you're charging? um, so yeah, this was one of your question.
So, Pratik, are
And
you trying to say that there is a rule by the regulator now wherein there is a fixed rate of interest, or there's a particular, kind of capping wherein the digital lending organizations can charge?
So I think that's a great question. So there is no capping as such, right? But there is a very clear definition of risk and what you're going to be charging. And this risk versus reward, or rather the upper cap limit, has been defined for various sections. If you read the regulations for banks, it will be different. For NBFCs, it will be different. In fact, this is a good question, which actually takes me to the next piece where the new paper which is coming up, the white paper on NBFC, is going to be a 4-layer thing where the instructions or the way the regulator is looking at things, it's very clear that you cannot have small time players with 1 or 2 crore kind of equity just open up an NBFC and just keep playing around under 5 crores kind of thing, right? The regulation clearly now, the conversations are minimum 20 crores of equity you need to have minimum. So only serious players will enter this business, and very large NBFCs can't run an NBFC. They would be governed by similar kind of governance rules which banks have. All right. So I think with all of these things, I feel that in next 6 to 12 months, NBFCs will be more governed, right? Currently regulator has been really looking at only the top tier of the NBFCs, but slowly and steadily we will have all of these guys being somewhere or the other responsible for how they are leading these lending practices, right? And a combination of bank partnership with NBFCs, partnership with fintechs, right? This is where the future is going to be, and this future is not too far. I think the regulator is moving pretty fast on taking these decisions. Um,
Okay.
I think you had one question. Yeah, you want to throw some question?
Yeah, so the main thing what I want to know is, okay, now since we've spoken about what is the digital lending models and concerns, so I want to know this, that the RBI has said that beware of mobile apps promising quick loans. Now, how
Exactly.
does a consumer exactly know which app is genuine, which is not, and what are the risks?
So I think what I normally say is you really can't control what is up there on the app store, right? When I am downloading an app, I really don't know. The other day I was downloading a WhatsApp on Apple Watch, right? When I tried to do that, I got almost 4 apps except WhatsApp, but they look just like that, right? So
Okay.
so so I think it's really uncontrollable. You have to with work along the way, right, with companies like Google Pay, Google Apps, or app stores, right, and figure out the right filtration criterias, how to decide whether it's genuine or no. Secondly, I think we got to even look at what our consumers are made of, right? Lending is never a push product, it's a pull product, right? You do not realize that I need a loan next week, right? You get up in the morning, you have an exigency, and you frantically go to some apps, and you go to your friends and family, right? And try to friends actually, right? Try to find out where can I get the quickest loan. Right, and hence if you see, the bottommost tier actually goes to a unorganized sector, which is a money launder, which is a, a jeweler or somebody at the pawn shop, right, who is unorganized money lender, right? So
Right.
lending is not a push product, it's a pull product, right? You
Right.
cannot really do anything about it. If you need a loan, you will download any app which comes shows up on the Play Store, and you will submit all those details if he promises to give you a loan in instantaneously or within X time, right? So I think you can do limited with that. Correct.
True.
What needs
True.
to be done is probably have these filtration criterias rightly built up, that whether you have access to KYC, whether you are, only regulated entities or only authorized people have access to the KYC, pulling KYC, something which is come up right now, that all NBFCs are required to display which fintechs they are working with, right? Report the kind of
True.
book they have with them, right? And all fintechs are also required to publish very transparently which NBFCs do they work for. I think this is where it is trying to, increase the knowledge within the ecosystem, right? And that is exactly the problem where is, right? Because जिसको लोन चाहिए वो कुछ भी करेगा लोन लेने के लिए, आप नहीं
True.
बंद कर सकते उसको,
True.
right? Yeah, I think you have one question, which is, what does the budget 2021 have in store
Yes.
for
Yes.
fintechs, right? So I think I was
Yes.
really happy to listen to the finance minister, and I was expecting there would be some sob story to start with, right? And the burden around how the pandemic went and what exactly happened. But I think there was no sob story. The first good thing. The second is that we are moving in right direction, right? There have been multiple announcements which have happened, right, in the budget, which talks about, the FDI, which talks about fintech hub at the 2 3 year old gift city in Gujarat, right? Granting of about 1,500 crores to grow the digital payment business. You have FDI in insurance, which is increased to 74%, and there is a double fund allocation to MSME for about 15 16,000 crores. So I think all of these, one more thing is one man incorporation, which is very good for startups, right? And no requirement or restriction on the paid up capital, etc. So I think all of these are very good announcements. I would have really expected that if it carried some numbers and some timelines as well, right? For something where we have crossed, something like UPI has recorded 2.3 billion transactions and trillions of rupees, right? We are allocating something like 1,500 crores, right? That seems to be a bit less, right? I think there needs to be, something. I would have expected some more, allocation of funds and a clear strategy of how we plan to increase the digital ecosystem, how we plan to increase the business penetration, right? And what the future looks like from the budget and pre-budget, announcements are something like what I said about NBFC. Then you would have heard about the bad bank, the asset management company, the ARC, which the government is going to do. So I think it's very clear that the future of the digital ecosystem and the banking ecosystem, and the digital lending, to be precise, right, is not going to be where regulator is sitting in Delhi, financial capital is in Bombay, fintechs are working out of Bangalore, and there is minimum or less coordination. So I think it's going to be clear. The direction which I'm seeing is clear about government owned and run partnerships. So government is clearly getting into ARCs, AMCs, AIFs, bad banks. So they'll pick up a bank, they will restructure it, and they will kind of own it, right? And they will run it with the help of industry veterans. Lending will grow multifold, and the credit and insurance penetration, which is extremely less in 16 digits, in single digits or double digits, right? It's going to be much higher. Right, the serious players and the people who follow regulations, who understand and who are less likely to be on the left hand side of the regulator, will be the ones who would be given the licenses and would run. In fact, everybody, most of you would be knowing that there are almost about 9,000 NBFCs which are currently existing, and there are about 80% of NBFCs who have less than 1,000 crore of book. So I think that is something to be watched out for, that actually after all of these things are done, how many actual NBFCs remain in the system, right? And how many would have to surrender if they're not able to raise that much of capital? Since I work with startups very closely and NBFCs very closely, I think I can see a clear struggle of founders and promoters who have less equity, have been just playing around with under 3, 4, 5 crores and running either their own businesses or lending to some ecosystem. And this is the place where it's more prone to something like engaging themselves with payday loan kind of companies, right, or the Chinese money, or whatever, which is not right. So I think the future lies in digital lending, and if we get all of these things right, right, you can see all the data which is being generated by the digital ecosystem. This data is very well used for underwriting. Uh, the consumers are more informed. The consumers will be using this credit more often for smaller purchases, right? And which is in turn going to increase the flow of funds, right? And obviously it will reduce the cash which is circulating. So I think that's where I am. And digital lending is the future. Just probably wait and watch, where you could just swipe, tap, any smallest amount, right? And just engage yourself. You don't need to worry about what's your bank account like. You just, everybody looks like will have a credit limit in less than 12 months time, and would be able to spend within those credit limits and just pay one or two bills. I mean, it's a pseudo credit card.
Okay, cool.
So so
So, Pratik, yeah, go ahead.
yeah, why don't we take some questions from the audience?
Yeah. Farhan, we have any questions from the audience?
Can I see them anywhere?
Farhan, are you there? Yeah. I don't think we have any questions.
Okay.
Yeah. Cool.
You have any questions?
No, no, Pratik. I mean, your session has been really interesting. You have started with a complete brief on digital lending and gave us all the required inputs. This was really a wonderful session, because we as consumers, okay, we don't get into so much of reading and understanding when we take loans. Okay, but this session was really, a proper brief. So thanks so much, Pratik.
Thank you so much, Sanya, for having me here.
Most welcome.